We have the Cunningham Township Board meeting, which will be followed by a very brief meeting of the Urbana City Council. And then we have the Committee of the Whole, which I believe is being chaired by Diane. Okay. Okay, so I would like to call the Cunningham Town Board meeting to order. Would the clerk please call the roll?
Ms. Ammons, Mr. Brown,
Here.
Mr. Jacobson, here. Mr. Madigan,
Here.
Ms. Marlin,
Here.
Mr. Roberts, Mr. Smythe, here. Mayor Pressing.
Here. The first item is the minutes of the previous meeting, August 4th, 2014. In the absence of Dennis Roberts, is there anyone to make this motion?
I'll move approval.
Second.
Okay. Motion by Marlin, seconded by Brown. Any additions or corrections? If not, all those in favor, please signify by saying aye.
Aye.
Those opposed? That motion carries. Next, the committee to verify bills, Michelle Mayo.
Bills for September 2014, including August interim checks. Total town fund is $62,853.93. Total general assistance fund is $20,812.62.
Okay. Any questions for Michelle? Is there a motion?
I move we accept the report.
I think we have to approve the bills.
I move we approve the bills.
Okay. Second by Charlie Smythe. Okay, motion by Jacobson, seconded by Smythe. Any
Quick
discussion?
question.
Yes.
Michelle, I didn't, since I just got these a few minutes ago, I was looking through them and I don't quite see the 60,000 here. Is it just 1,000 here?
In the
1,000?
town fund?
Yeah.
Okay.
Or am I just not, or do I not have everything here?
There's 49,000. The first 5 pages are the interim checks that we do in the office every Friday.
Okay.
And then the second page of the next printout has a total of 49,256.
Okay. I'm just
67, and those are all town fund bills.
missing- Okay.
Where it starts actually with your name, Charlie Smythe, on the
Okay.
first page.
So it's just, they just all add up. Okay. Thank you.
Yes, you're welcome.
Any other questions? All those in favor, please signify by saying aye.
Aye.
Those opposed? That motion carries. Reports of officers?
When I gave you guys your caseload graph, attached to that is a memo from township officials of Illinois. This goes out to all township officials, and it is their 2015 legislative survey. And if you want to participate in that, you would just read and fill out that last form, and it has on there the instructions and where you need to mail it back to. So that is up to you, but it just has, if you have any questions or anything, suggestions that you think need to be changed with statute, constitution, those kind of things, that is what that is for.
Okay, thank you.
You're welcome.
Anything else? That's it? All right, petitions and communications. Is there anyone who would like to address the Cunningham Town Board? Apparently not. Then you want to talk about the audit?
Yes. Luke Sparks is here from Kemper CPA Group LLP. Our audit for 2013 is complete. You all received a copy of the financial statement in your packet that was sent to you. So Luke will briefly go through that and then answer any questions that any of you may have.
As Michelle mentioned, I'll try to be fairly brief here. If you can start with the bound audit report, that's what I'll go through first. There's 2 letters in a bound report, so your big blue bound one. I'll start with page 1. Page 1 of that report, this is just our audit report. This is the accounting jargon where we explain what we do and what management's responsibility is. And then If you turn to the second page, this is where we state our opinion in the first full paragraph there under opinions, and this is where we state that we believe the financial statements are fairly stated in all material respects, or a clean audit opinion is what that is. So now I'll skip to page 3. Page 3 is your government-wide statement of net position or balance sheet. So in total, you've got total cash and cash equivalents as of June 30, 2014 of a little over $2 million. Second line there, total capital assets of a little over $53,000. And then towards the bottom under net position or net assets, you've got total invested in capital assets of the $53,000, restricted funds of a little over $1.1 million, and unrestricted of $873,000. There's some more detail, a couple more pages down that breaks down what those are. I'm going to skip page 4 because it's a little bit easier to see on one of these other statements. So I'm just going to go to page 5. Page 5 is your balance sheet for the governmental funds only, which the town fund and the general assistance fund. So it shows the cash by fund, the $873,000 for the town fund and the $1.1 million for the general assistance fund. And then further down below that, you can see what the funds are restricted for. So under the town fund there, under assigned, we've got $266,000 assigned pending the result of the Carl stuff going on. And then under that, unassigned funds of a little over $600,000. Then in the second column there for the general assistance fund, you've got funds restricted for general assistance totaling a little over $900,000, and then assigned funds of a little over $200,000. Again, that's all Carl, the contingency there. So then I'm going to skip over to page 6, or go to page 6. That's the next page in your packet in the report. So under town fund, you've got total revenues of a little over $600,000, total expenditures of same thing, a little over $600,000 for a total excess of revenue over expenditures or net income of a little over $14,000. Right next to that, the general assistance fund, you've got total revenues of almost $700,000, total expenditures of a little over $400,000 for a total excess or total net income of $288,000. Then next I'll briefly cover page 7 here. Page 7, the next page, it just reconciles the total net income for the governmental funds to the total net income for the overall governmental activities. There's a minor difference there because of how the fixed assets are treated. So there's a small adjustment for depreciation expense and capital outlay. But that's all that statement does. And then pages 8 through the end, I really hadn't planned to go over. These are all the footnotes that kind of go into some painstaking detail about all this stuff, and then the supplemental information behind that, which like I said, I don't intend to cover that specifically unless somebody has any specific questions. For the moment, I'm going to skip over to these other letters. I'll start with the one letter. It's the 2-page letter you've got in your packet. This is what we call the SAS 114 letter, named after the accounting standard that requires us to issue it. This is just things that we're required to communicate to you all, and there's really nothing in here, honestly. It's just if we had problems dealing with management or disagreements and things like that, we'd be required to communicate them in this letter, but of course there was nothing like that, so this letter doesn't really say a whole lot. And then the other letter is what we call the SAS 115 letter, where we comment on any control deficiencies. And we have just the one, which is the same one we've had in past years regarding ability to prepare financial statements and footnotes. So that's nothing different from past years. That's really all I intended to cover. Be happy to answer any specific questions if anyone has any.
Bill?
Yeah, on the funding of the pension program, I understand it's being, the underfunded part is being spread out over 30 years. Would it make sense, or would it make sense to reduce that period of time that's spread out to pay it off sooner? What's typical? And is that the unfunded ratio of 139%, is that common with what you see with other townships?
Take a minute to look at this one here.
What page are you on?
Page 17 and 18, note 4. So we're contributing the required amount, and we're spreading out the underfunded amount was $481,000. We're spreading that over 30 years.
Yeah, that is typical. All this data comes from a report that we get from IMRF. We get a report from IMRF where they actually, they do their actuarial report, and their actuaries give us all the numbers, and that's where all these figures come from that are in here.
The township's been contributing what the actuaries say we should contribute, correct?
Correct.
Right.
That is correct.
So we're on schedule.
Do you know if that 139% of underfunded is typical with what other townships have?
That I'm honestly not sure. I would have to do a little research on that and look into that. I'm honestly not sure on that question there. I can look into that and try and get back to you guys.
Okay, thanks.
Any other questions? Eric?
I'm inferring, but I thought I'd ask explicitly. Of course, we want the Carl thing to turn out in our favor, but if it doesn't, we don't, as far as the township is concerned, we don't have anything like, that doesn't constitute anything like an emergency or a dangerous slippage of our financial situation?
No, it doesn't. And actually, I think it's a good thing, because basically what you're doing is you're setting aside those funds in case you do have to pay them. Obviously, the hope is that you won't, or not sure what the status of that all being resolved is. But yeah, I think you're being very conservative in setting those funds aside just in case you do have to pay that out.
So it's just Carl? Nobody else?
Yes, it's only Carl.
Okay. Any other questions? Michelle?
There is about $4,100 of presence money in there, but
Okay.
the total with the two of them is over $598,000. So, but only $4,100 of that is presence at the current time.
Okay.
Like I said, it's mostly just Carl.
Okay. All right.
Thanks, Michelle.
Just a tad bit, sorry.
Okay. Thank you very much.
Thank you very much. It was a pleasure to do the audit, as always. Staff is always very easy to work with, so we appreciate that very much.
Okay, we don't have any unfinished business to deal with tonight, do we? New business, resolution number T 2014-09-004R. Resolution authorizing certain individuals to sign checks in the absence of the township supervisor or the town clerk.
This is being redone because originally, well, not originally, but years ago, Debbie Roberts was added to this, and since she has retired, we need to remove her from it, and that takes care of that. And the caseworker used to be a check signer at the township in my absence, so she has also been added, which is Dina Landis on here.
Okay, who's Jamie Elizabeth Willard?
The other check signers at the township have been the assessor and the chief deputy assessor.
So she's the chief deputy?
Correct.
Okay, all right. Is there a motion?
I move approval of resolution 2014-9-4R.
Second.
Okay, motion by Smythe, seconded by Marlin. Any questions? All those in favor, well, maybe, I guess we can just do this by a voice vote, right, Mr. Attorney? He's not paying attention. All those in favor, please signify by saying aye.
Aye.
Those opposed? That motion carries.
Mayor,
Yes,
before,
Charlie.
before we adjourn, just like to point out that we now have roughly $1 million. I think if you discount Carl, I think we have about $1 million in the GA fund balance. and the combined township, or town board, or combined GA and other fund have a good, solid, hefty surplus in them. Well, appropriate to what we should be carrying. So when we go to setting the levy for the township next year, we should take that into account, figure out what a good moving average is for the funds that we need, and from the looks of it, we probably could lower our levy or keep it flat next year. Cut taxes a little bit if we could.
Eric?
I think that's certainly one idea of what to do with that. A second idea, and I think this, warrants discussion. I'm not saying this is what we should do, but a second idea would be to do some more of what we wish we could do with our tight budget from the city in terms of social service funding.
Absolutely.
Yeah.
Okay. Anyone else? Yes, Michelle?
Just one comment, one thing to keep in mind with the Affordable Care Act, that is not guaranteed 100% federally funded after 3 years. If it disappears, we are responsible once again for client medical. So I am all for not raising the levy, not raising taxes at all. But depending on what we have at the end of the fiscal year, actually lowering it, we can't go over, what we would have 1 year worth of expenditures in surplus. And I want to maintain that, but I also don't want to be caught off guard if the Affordable Care Act is not 90% funded, it disappears. And the township then becomes responsible again for all of the medical for our clients.
How much of a reduction in medical expenses have you achieved?
Well, we cut the client caseload. I took office last May, and we cut it by 94 in a year.
94 people?
Correct.
From how many total?
I have it actually. When I took office, it was at 156, and in May of 2014, it was down to 62.
Okay.
Okay.
So it's a pretty big reduction, but the other constraint that the township has is that they're under tax caps. So if they lower the levy, they won't be able to raise it.
No, I
So
understand.
there's
I think,
a balancing
right,
act here.
that's what I said. We need to calculate appropriate moving averages and
Right.
take into account.
Yeah, and I'm all for that. I don't want to raise at all if we don't have to. Perfectly fine. I just don't want to get, caught off guard and not have what we can have in surplus, and then we get stuck paying the medical bills again because the Affordable Care Act's going to disappear.
we should be able to make that calculation then.
Right,
Yeah.
exactly. So that's where I'm at in my thought process. I mean, I'm on the same page as everybody. I just want to, let you know things that can happen within the next couple of years as those things, could come up and we could be responsible for. And GA has to be paid. Whether we have the money or not, we'd have to loan from the bank. General assistance is required by law to be provided, the GA amount and the medical. So if we don't have the money, we've got to take out a loan, and that is the last thing I want to do. So I would like to maintain the surplus because it's never been like this before. And I don't want to get caught having to pay the client's medical, and us not have the money.
How would you ever repay the loan if you can't raise the levy?
Exactly.
Okay.
A slippery slope to a bad place.
I mean, yeah, because the client caseload is maintaining about where it's at now. So, if it stays like that over the next couple of years, we know where we're going to be. So the medical, we only spent half of what was budgeted from the previous year.
Mm-hmm.
So that went into surplus. So if we have to pay medical again, you can kind of judge, but then that's going to change because I'm sure coverages are going to change. as to what Medicaid's going to pay and what it's not going to cover and stuff like that. And we still pay, you know, optical for our clients, you know, the things we're not required to, but we still provide, you know, dental and dentures and that kind of stuff. We still do some things that the Affordable Care Act is not covering. So there is some medical that we are paying, but if we become responsible, again, for 100% of that, it's going to take another big chunk. It'll be more than probably our personal allowance line item, what we pay our clients.
Okay. Anyone else? There being no further business, this meeting is adjourned. Thank you all.